Let's play a game of guess the direction. You've got 5 seconds to predict where the price will go. 5, 4, 3, 2, 1. What's your guess? The correct answer, buy. Now let's analyze the outcome together. We can clearly see that the market is in a bullish structure, consistently forming higher highs and breaking previous highs to the upside. At the moment, price is pulling back, likely to fill an imbalance and retest a demand zone before creating a new higher low and continuing its upward move. The first thing we want to do is mark our current swing range, identifying both the current high and current low. From there, we'll use the Fibonacci, drawing it from the swing high to the swing low to identify our discount zone. Because in an uptrend, we only want to focus on key levels within that discount. Those are the levels most likely to hold and react. In this case, we've identified a single key level, the demand zone, which we'll wait for price to tap into. Once price reaches that zone, we drop to the lower time frame, but we don't rush in. Instead, we patiently wait for an internal change of character to the upside because we can clearly see that price hasn't realigned with the higher time frame. And just like that, price realigned with the higher time frame by forming an internal change of character to the upside. At this point, we repeat the process. Draw your Fibonacci from the low to the high to identify the key levels within the discount zone, as these are the levels most likely to be respected in a bullish market. After marking these levels, we wait for price to react and reveal which level holds. In this scenario, price didn't even tap into our zone. Instead, it broke structure to the upside once again. With that structural break, we repeat the process after a pullback is formed. Pull your Fibonacci from the new high to the new low to identify your key levels in your discount zones. This time, there's only one valid key level, a demand zone, and price has already tapped into it. Now all that's left is to wait for a valid entry signal. And that right there is our signal. Now you can execute your buy position with proper risk management using a minimum 1-2 risk to reward ratio. Now, let's watch how the trade plays out.